with United Way to help the homeless in my community learn computer skills and build a basic resume. I don't just wear this shirt, I live it.
Give, advocate, volunteer, Live United. Go to liveunited.org. Brought to you by United Way and the Ad Council.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston, the Money Matters Radio Network.
How does your DAV membership benefit you? As a DAV member, in addition to DAV programs and services, members are entitled to a member benefits package, which gives you access to a variety of important programs, products, and services. Also included with your membership is a free subscription to DAV Magazine. For more information, visit davma.org. That's davma.org.
Beneficiary planning and asset protection go hand in hand, but leaving everything to your kids can be problematic. Call Cushing & Dolan at 866-848-5699 and get their new guide called How to Leave Assets to Your Beneficiaries. Don't leave your future or your children's future to chance. Call 866-848-5699 or request it online from our website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Preparing for an Upcoming Retirement. Mike, what kinds of things do people need to look at to know whether or not they can undertake a successful retirement?
Yeah, I mean, first steps first, we talk about your income sources in retirement versus your expenses. And usually the easiest thing today is to look at what are my income sources now, how will they change, and what are my expenses now, and how are they likely to change. On the expense side, oftentimes it's not that big of a change, but I think that's the first starting point before getting into more complicated things such as my investment portfolio, my health insurance situation, or Social Security strategies.
Mike, a lot of times people are concerned about whether they have enough to live all the way through retirement, and so they might delay their retirement significantly. But it's also worth pointing out that sometimes the biggest risk is not retiring early enough, and you might miss out on some retirement years that way.
Yeah, I mean, look, we all do get worried about longevity, and there are plenty of warnings out there in the media about how Social Security or these other things might not keep pace. But man, it sure is devastating to see the opposite one, where you work your whole career, work your tail off, save all this money, and it can impact your health. It can impact all sorts of things. And to not get to enjoy that full retirement because you choose to work longer than you might have needed to is so much more frustrating.
Our guide this month is titled Preparing for an Upcoming Retirement, and there are two ways you can request it. The first is by calling 800-393-4001. The second is by going to ArmstrongAdvisory.com. That phone number again is 800-393-4001, or you can visit ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Good morning and welcome back to the Financial Exchange. It's Mike Armstrong, Paul Lane, and Tucker Silva with you on a Thursday morning with equity markets selling off pretty significantly. So we are going to get right to it, Paul. I'm going to give you a few options of where we start, most of which could be related to today's sell-off. One, we had commentary from Mark Zuckerberg during the earnings call yesterday for Meta. We had GDP, gross domestic product reading, that came out for the first quarter, weaker than expected. And, of course, probably most significantly for markets and everyone's livelihood, Red Lobster may be entering bankruptcy. Do you want to start in the Red Lobster story, or do we go elsewhere?
Let's kick Red Lobster to probably stack roulette at the end of the second hour. But GDP, I feel, is the best place for us to start, and then we'll put Zuck at 2.
So let's go to GDP first. This was the first initial reading on the first quarter GDP, and to give you some context here, 2023, really strong year for economic growth, really across the board. The fourth quarter of 2023 was showing an annualized rate of 3.4%. And, generally speaking, expectations for this first quarter GDP by most economists was over 2.4%. These things are always volatile. They get redone sometimes. There are alterations to the reading, but we've quoted that GDP Now tool, for example, that was showing a GDP reading of somewhere in that 2.5% to 3.5% range. Instead, what we got was 1.6%. That is the slowest pace that we've seen since the second quarter of 2022.
Not a great number based on what we were projecting, but we're going to dive into why perhaps in one realm it's not a great number, but in other aspects it is a somewhat positive number that you can glean. And so first, I just wanted to step aside for a moment and just explain GDP for the listeners out there. Very, very basically, what does our country consume and produce as an economy? It is a way to measure goods and services produced by an economy in a given year. So when you're trying to gauge the sort of stability or fair how the economy is doing, GDP is really the common metric that we'll use oftentimes to look at that growth. The amount of growth that we saw in 2023, that's much more outsized than what we typically see from the U.S. economy, which is incredibly developed. 2% is sort of where the economy will typically grow on average. So seeing 3.5, Mike, was a huge number. So to be clear, it was going to be hard to replicate what we saw in 2023. However, this number coming in so much lower than what was anticipated, 1.6% versus the 2.5% forecast. The reason that we're likely seeing a bit of a sell-off on markets today is typically earnings from the S&P 500 companies over a long period of time show a strong correlation to U.S. GDP. So as the economy grows, we buy and consume more stuff. That trickles down to all the companies that buy and sell, or rather sell more stuff to us, their earnings grow. And that's why we're seeing a little bit of a sell-off on the equity front. What's very perplexing to all of us here is the fact that the U.S. 10-year Treasury on the bond side of things,
Yields are spiking a bit.
is up 7 basis points to 4.72%. That is not something we would have anticipated from this weaker reading.
So we were kind of talking about this stuff offline before going on air, and it's one of these things with markets that I think most people who do this for a living will tell you honestly, which is, even if I knew yesterday, which I didn't, but even if I knew where the GDP reading was going to come in because I had some sort of insider information, trying to predict what markets are going to do based on that information is outrageously challenging. It's really, really difficult to even insinuate what might happen based on a number of different maneuvers. Now, equity markets, maybe they're also being dragged down by the meta earnings that we're going to talk about. But this GDP report, by all definitions, what this indicates is an economy that is growing at a slower pace. It's not slowing down. It's not showing contraction like it did in 2022. 1.6%, all things considered, given where this economy has gone over the last few years, isn't a bad number. But it's substantially weaker than most had been anticipating. And so if economic growth is being used as a proxy for where earnings might go in the future, where wages might go in the future, the idea here is that it's slowed down. If it's slowed down, that may relieve pressure on inflation in the future. And so when you're kind of drawing out these relationships, you say, okay, well, if it's going to relieve future inflation pressure because the economy isn't growing as hot as it was at the end of 2023, then maybe the Fed can cut rates at some point down the road. Instead, what we're getting today is a bit unexpected. Again, like I said, Treasury yields moving up in reaction to this weaker than anticipated GDP report. So I don't have a ton else to put on this other than to say nobody really knew where GDP was going to come in. This was a bit of a surprise report, and may in fact be a good news story for inflation. On the negative side, what I'll say about this report is that we've been talking so far this year about how, a lot of people thought rates were going to come down. Now they're going up again. That was a similar relationship to 2022, where we didn't expect rates to come down, but we certainly didn't expect them. Most did not expect them to increase by 4.5% in a single year. 2024, over the last couple of weeks, people have been comparing it to 2022 to say, oh, we had higher than expected inflation, rates needed to go higher than was anticipated, and we had weak economic growth. And the counterpoint to all of that was, well, this year we're not having weak economic growth. Earnings are pretty good. GDP is pretty solid. And look at where we are. That was before we got this GDP report. Now I think more of those comparisons are going to be made. And the weaker, these GDP reports look in the future, the more apt of a comparison it is, right? I mean, inflation in and of itself is a tough problem to have, but if companies are able to raise prices and grow profits, then it's less of an issue. If you have inflation and at the same time companies aren't able to drive higher prices and grow profits, then it's a real problem. Then it's a real problem that you end up dealing with there. So that's where we are. In terms of some of the details here, where first quarter GDP was helped, we had consumer spending, again, up 2.5%. That was down slightly from the previous quarter, where it came in at 3.3%. Investment was a 3.2% increase. That included a 13.9% rise in housing investment. That was up from the prior quarter, and that spike in housing investment, which again, we've talked a lot about the housing market this year and how that could contribute to growth in the future. The spike in the housing investment was the largest quarter-over-quarter increase since the fourth quarter of 2020. So I continue to think, I'm with Chuck kind of came up with this idea, but we're still seeing nationwide inventories for single-family housing are up a good 20 to 25%, and you're seeing a lot of investment in this space too. I still, even with this GDP report, have a tough time figuring out how you could possibly go into recession if that inventory eventually clears.
Right.
That's just where I'm landing here is usually when you have increased inventory of housing, you eventually have increased sales in housing. That generates all sorts of economic activity, from broker commissions to lawyer fees to new title insurance to paint shops to hardware stores to new decks, everything under the sun, new furniture, all of this stuff. If you have even an increase in housing sales to the tune of 10 to 20% compared to this time last year, I just have a really difficult time seeing how this economy shrinks into recession this year. Doesn't mean it can't slow, but shrinking into recession is tough for me to envision, even with this new report and even with where things have gone this year.
I agree with you there. The other piece to point out regarding the spending side of things is we saw an increase on the services consumption, and that really jives with a lot of the feedback that we've been hearing, that the consumer has continued to focus on spending on leisure and hospitality. You've referenced the idea of quoting, what's that index that more people are looking to travel on European vacations?
The International Travel Index is my new Taylor Swift index, yes.
So basically people are still looking to get out there and live it up and spend on leisure and hospitality. We saw that become additive for GDP in this past quarter. Conversely, on the good side of things, we saw a little bit of a detraction there, and that really lines up with what we've seen from a spending side of things over the last year plus or so.
Inventories were a negative 1/3% contribution to GDP, and net exports nearly a full percentage point detraction from GDP. So large growth large drag compared to the previous quarter is what you saw there. So, I think the question is this a pivot point for the economy, right? We frequently talk about how GDP tends to be pretty consistent. If you're trying to forecast what the next quarter's GDP growth is going to be, look at the last quarter because it tends to be a pretty good indicator, except when it's not. And when it's not, it tends to turn and can turn dramatically. And so are we at the point of a pivot here, or is this just a blip on the radar like we've said with other things in the past? And we likely won't know until revisions are made, until we see a few more quarters.
And that's the last point to make. Yeah, this is the first look at it. So there could be revisions upwards or downwards. So, it's just one data point, but it could be adjusted.
Let's take a quick break here. When we come back, I mentioned Mark Zuckerberg's conference call yesterday with investors on their earnings for Q1 for Meta. We're going to talk about that next and how the stock's reacting on the financial exchange.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
Beneficiary planning and asset protection go hand in hand, but leaving everything to your kids can be problematic. Call Cushing & Dolan at 866-848-5699 and get their new guide called How to Leave Assets to Your Beneficiaries. Don't leave your future or your children's future to chance. Call 866-848-5699 or request it online from our website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us help you secure your financial future. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. Visit the U.S. Virgin Islands and enjoy your next incredible vacation. Explore St. Croix, St. Thomas, or St. John and enjoy pristine beaches, world-class dining, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required or money to exchange. Go to visitusvi.com and book your trip today. That's visitusvi.com.
So we, as anticipated, heard on earnings from the Zuck last night, from Mark Zuckerberg on Meta, and he had a very direct message to shareholders. It was basically, I expect my stock to take a hit, but we are making investments that are going to be costly, and historically when we've done this sort of thing, it's meant for some volatility for our stock price, but long-term has paid off. We'll talk about whether or not that's purely factual, but there's some evidence that that is the case. And basically saying that, yeah, while we spent the last few quarters really focused on cost-cutting, efficiency, some layoffs, and really just being profitable here, the next year and throughout the rest of this year, we're planning on pouring $40 billion into artificial intelligence research. They have not put a bullet into the metaverse, in fact, saying that they're going to continue investment there. And investors so far reacting exactly the way he thought that they would, which is causing some volatility in the stock price, Paul.
This was a really defiant Mark Zuckerberg in terms of what we heard from the call yesterday, contrasted what we saw from Elon Musk on the Tesla call, where I thought he was very focused on appeasing investors by focusing on producing a mass market electric vehicle. You now have Zuckerberg coming out. The market or the investment community had loved the year of efficiency that Facebook and Meta had gone under in 2023, where cost cutting was more of the focus. But this was very different than that approach. It was much more, screw you guys, we're going to keep spending, and we feel that this is going to be the best approach for our company. He really spent a lot of time focusing on touting their spending in the metaverse, and particularly in AI. The capital expenditures for Facebook for 2024 is going to be between $35 billion to $40 billion, Mike, as you mentioned. That's higher than the prior forecast of $30 to $37 billion. So as opposed to cutting expenses, he really reversed the messaging and said, we're going to spend even more money and we think it's going to add to our bottom line, but it's going to be a longer cycle until they actually realize gains from that investment. And we can sort of debate, Mike, I don't have a timeline in my head as to all the times in the past where the investment community beat up Facebook for making investments for future endeavors.
So the huge success to me on that end was he was really challenged when he needed to go from web browser desktop version of Facebook to mobile.
Right.
And really got beat up like, hey, are you going to be able to do this? Investors were challenging not Mark Zuckerberg himself, but Meta, the company, Facebook, the company at that time, to say, are you going to be, and in hindsight, you look at that and you're like, yeah, of course, everyone uses Facebook on their mobile app. But at the time, that wasn't all that certain, and so it's been looked at. Now, other ones, I think, the metaverse in particular. This is a recent one, but been pouring billions of dollars into this product and continues to do so without any timeline of payoff here. Right. And same can be said for some of the hardware products that they've invested in. There's a Facebook-produced screen that's kind of designed to like go in your kitchen, for example, for video conference calls. That's gotten zero traction. There are the Facebook glasses that were being produced and things along those lines. And so I can't say, let me put it this way, with Apple, they have consistently proven me over and over again that they are able to produce products that people want and
create categories
that
weren't there before.
I'm not so sure. Now that said, Meta increased their quarterly sales over the last 9 months by 27.6%. That's growth that has outstripped Apple, Microsoft, Google, Amazon. Like, this is sales growth that has been genuinely very, very impressive, and their stock price recently had been rewarded for that. Today, stock's down about 10.3% in early trading because effectively Mark Zuckerberg's telling you, hey, I'm taking these profits from these increased sales that we are seeing, and I am funneling it back into these products that, for me, I just have a tough time seeing how they get monetized.
I do as well. I don't have the visionary power that people who work in that tech space do, where perhaps their investments in AI will reap fruit from them, but typically what they've made their biggest success on is their core competency is their social media networks. The acquisitions, advertising is 98% of their revenue. So these products that they're mentioning, to me, I don't see the direct correlation to driving more ad dollars immediately until you
the
get mass
metaverse one
adoption.
is obvious, right? The metaverse one to me is very, very obvious. If you all of a sudden have millions of people signing onto the metaverse,
you're in the next spot.
You are
for advertising.
You are the system. You are basically the internet of that, and can deliver advertising directly to those customers, like Google does for search advertising. That would be amazing, but nobody's there.
Right.
Artificial intelligence, I just continue to very much struggle with to understand where that is going. Like, today, the AI that we know are basically large language models, and so I don't really fully understand how Facebook, Meta, being first to market on a large language model is going to increase revenue. And that's the case with every new emerging technology. That was the case with the internet too, right? It was, this foundation, this bedrock is being built. Who's going to be able to monetize it appropriately? It turned out it was, Amazon, Google, some companies that didn't exist at the advent of the internet. And I don't know if you're better off cost-cutting and being the last to the party on AI with a big product that is actually applicable to the market and monetizable, like the Apple method, or saying, no, we must be first to market because if we're not, then we miss out on X, Y, and Z. I just can't put my finger on what X, Y, and Z are, but Mark Zuckerberg and Meta seem to be going on the latter route, saying we must be first to market on these products. We must be first in consumers' hands on artificial intelligence, on the metaverse, in order to continue to thrive. Quick break. We've got Wall Street Watch coming up next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
If you're thinking seriously about retirement, now's the time to build a sound plan that will help you enjoy your later years. This is Mike Armstrong from the Armstrong Advisory Group, and if you're one of the millions of Americans at or nearing retirement age, it's important to understand how to develop this plan, and our new monthly guide may help. In it, we discuss strategies to prepare for an upcoming retirement. We'll walk you through the process of putting together a retirement income strategy, exploring your healthcare options, and managing potential financial risks. There's also the crucial issue of maximizing your Social Security benefits. Call our office today at 800-393-4001 and get your copy of this new free guide, Preparing for an Upcoming Retirement. That number again is 800-393-4001, or you can request it from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
If you served in the Marine Corps, by now you know about the contaminated water problem at Camp Lejeune. If you were stationed or worked at Camp Lejeune from 1953 to 1987, you probably have a lot of questions. We have some answers. You could be entitled to compensation. Billions of dollars are being allocated to pay for damages to anyone stationed at Camp Lejeune during that time. Unfortunately, it appears that officials may have known the contaminated water problem existed and did little to protect their men. The Semper Fi code was not honored. If you or someone in your family has developed a serious illness, including various forms of cancer, call this Camp Lejeune legal support line right now. You can't turn back the clock and change what happened, but you can certainly call right now and learn your rights as a Marine. Here's the number.
800-477-1736. 800-477-1736. That's 800-477-1736. Paid for by Legal Alert Line.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about your brand new guide, Todd, how to leave assets to your beneficiaries. Todd, how can you ensure that your kids' inheritance can be protected from future divorces?
Well, estate planning, as you know, does things like avoid probate, protect assets from nursing homes, and reduce taxes. But you know what? The family behind the estate plan can be more important. And so the trusts live on after you die, and you can have language in there that divides the assets to the children, but doesn't just pay it out, right? It holds it in trust for them and allows them to be trustee, but just not take it. In order to get it, they have an independent trustee that can say yes or no. And that way, by not owning the asset, if they get divorced down the line after you're dead and the other side says, hey, I want half of what's in that trust, you're going to say, that's great, but you have to ask the independent trustee. So it's now not going to be available to you. And more than just the ability to say no, it's the fact that you don't own it. So if you don't own it, it's not a marital asset to begin with, so it should not be even subject to the divorce. So learning how your trust works after you die can oftentimes be more important than when you're living, and it does more for you after you die than when you're living sometimes.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they've written a brand new guide called How to Leave Assets to Your Beneficiaries. To get your free copy of this comprehensive guide that will help you determine the best way to leave assets to your family, simply call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
The busy week continues on Wall Street, where traders this morning are digesting a first quarter GDP reading, which showed the economy grew at a 1.6% annualized rate, slower than forecasts of a 2.5% reading. Right now, markets are in sell-off mode. The Dow is down by 1 2/3% or 634 points. S&P 500 is down 1 1/3% or 66 points. And the NASDAQ is also down by 1 2/3% or just over 250 points. Russell 2000 also off 1 1/3%. 10-year Treasury yield jumping by 6 basis points, now at 4.71%, and crude oil up just over 0.75%, just above $82 a barrel. IBM shares down by 9% after the tech company missed first quarter earnings expectations amid a slowdown in its consulting business. Outside of earnings, IBM announced a $6.4 billion deal to buy HashiCorp. HashiCorp stock is jumping by 4.5% on that news. Meanwhile, mining giant BHP offered to purchase longtime competitor Anglo American in a potential mammoth deal that could reshape the mining industry. Reports indicate that Anglo American is still weighing the $39 billion takeover bid. Anglo American stock is jumping by 14%, while BHP shares are down by about 2%. Elsewhere, Chipotle up by 3% after the fast casual burrito chain said that faster service paired with reviving limited time menu offerings helped boost revenue and margins in the first quarter. Ford down by 1.5% after the Detroit automaker posted first quarter earnings that beat forecast as sales of big trucks to big commercial fleets offset struggles in its EV business. And after today's closing bell, more major earnings on the way as tech giants Microsoft and Alphabet are slated to post their first quarter results. Intel and T-Mobile, among others, will also report. I'm Tucker Silva, and that's Wall Street Watch.
Well, Tucker just alluded to it, but just to set the stage for this afternoon, you've got two companies reporting. These two alone represent $5 trillion of market capitalization, or approximately 11% of the total S&P 500 market cap. We're, of course, talking about Microsoft and Alphabet, the parent company of Google. And so we just had Meta report, and without even telling you what the guy said, the stock's down 10.5% in early market trading so far. So we'll see where that one goes. But clearly investors not liking what they heard from Mark Zuckerberg and Meta, the parent company of Facebook, Instagram, and others. What do you suppose investors and analysts are going to be asking the leaders of Microsoft and Google during this afternoon's calls?
To me, the focus is going to be on AI and any numbers that they can point to in terms of more mass adaptation of this technology. I believe that, in particular, if you look at Meta, the quarterly numbers that they came out with were strong, and Microsoft and Google could be the same, where they show strong revenue growth and strong earnings numbers, but the way the stocks could deviate from those numbers is all about sentiment for future AI adoption, because that is really why the stocks have been priced to perfection, is the hope that you'll see just a really additive boost to revenue because of the developments on the AI side of things. For Microsoft specifically, the Azure Cloud Services arm of Microsoft, that kind of has the embedded sort of AI piece to it, where you might be able to, now they don't separate out as a separate line item, but Microsoft has been unveiling their Copilot AI powered assistant within all of their suite of products. So to see that and a revenue growth there, they're anticipating 15% on top line and bottom line in that cloud services unit at Microsoft for Azure. So that's the one you're really going to be focusing on. That's what investors will be focusing on when we get this earnings reports here.
Let's expand this a little bit. So obviously we have Microsoft and Alphabet this afternoon reporting earnings. And yes, I think you're absolutely right. It's going to be two questions. How did you do in the most recent quarter? How do you expect to do in the most recent year in terms of sales? And how much of those sales are you going to spend on investments in AI? And are those ever going to pay off? let's expand this a little bit to 5 big tech household names. I'm going to include Apple, Amazon, Meta, Google, and Microsoft. To me, we've talked about FANG. It kind of falls into a lot of these categories whenever we're talking about the high-flying tech stocks. These are them. For me, it's easiest for me to understand how Microsoft can implement AI into their overall product offering, right? You've got the Microsoft suite of tools, and if you can train an artificial intelligence to be able to run a spreadsheet for an analyst or build a PowerPoint deck for a investment banker, there are companies that will pay a lot more money for that suite of offerings because it means that I'm not hiring a $100,000 head in New York City to do this stuff for me. I can get that. That's really, really easy for me. Google also has a suite of Office products. They have Google Sheets and all this stuff, but it's not a huge revenue and profit driver for them. Where they make all of their money is on advertising sales.
Right.
If you are talking about today's version of artificial intelligence, it's large language models. It's I go to you because I want an answer to a question. If AI is successful, that means I don't need Google to answer questions for me. So I just, kind of throw it in my hands. I don't know exactly how Google monetizes this product in the same way that other companies do.
It would be them developing a large language model that replicates the success that they've had on the search engine front, basically.
How do you advertise for that? Right? Like, if I am doing such a good job of getting the answer to Paul Lane's question, where does the advertising go? Because the design of a large language model is, hey, tell me who... tell me 5 tips for going on a vacation to Hawaii. And right now, Google makes a ton of money because travel agents and all sorts of companies who operate in Hawaii for tours pay them a boatload of money every time somebody searches anything about Hawaii to get those eyes over to their product.
Right.
And if instead I've got a large language model just giving me the answer, I just hesitate to see how that works.
They couldn't cite those same... So the large language model is pulling that piece of data from existing information on the internet. They're probably going to have to cite that. So couldn't they just cite that and parlay the advertising
I guess
that way?
That could be the answer is, we would suggest this company who runs this tour in this place. And
but then you get into all the integrity sort of issues there.
Oh, they've got integrity.
Well, no.
It's Google.
Oh, of course. I know they don't. But there's just so many legal issues to sort out, even when a product goes to market, as to what is the appropriate way to regulate it.
Yeah.
It just makes my head spin even thinking about it.
And likewise, Apple, what product are you going to create? What hardware product are you going to create that so well integrates artificial intelligence? Maybe they're going to be the first one with a wearable AI tool that you're asking questions of. I don't know. But to me, Microsoft is the low-hanging fruit. And so therefore, I think expectations are rightfully really high for Microsoft to say, okay, you're the easiest use case of all the big tech companies out there. How are you doing with it? Are you creating, usable products that people will pay money for already with AI, or is it going to take years for you to get there?
Well, that's the problem, is that the expectations that have been set by the investment community are really not fair. To this idea that all of a sudden that it's going to be...
Get fair out of here.
Well, it's not going to be, when you have a company earning $90 billion, $100 billion in a given year, there's just no way that any type of growth that they have is going to make a significant dent into Microsoft's annual revenue at this point in time.
No, it's
the
not.
internet itself took a decade plus to really evolve to where it is today. But
yeah, beware of that, right? Again, the thing that worries me about AI is it took a good decade from the advent of the internet to come up with ideas that were going to really successfully take advantage of it. And the leaders in the clubhouse at the advent of the internet, with a few exceptions, which are notable, were not the leaders on creating those products that led the internet revolution. Let's take a quick break. When we come back, new rules when it comes to airlines and a couple earnings reports from some major airlines. We'll cover those next on the Financial Exchange.
Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play the Financial Exchange. This is the Financial Exchange Radio Network.
If you're one of the millions of Americans at or nearing retirement age and you don't have a solid plan, it may be difficult for you to enjoy your retirement years. Hi, this is Chuck Zada from the Armstrong Advisory Group, and I've got some questions for you that may offer some guidance as to whether now is the right time for you to retire. Can you retire? Do you have enough money to live the way you'd like to? Should you retire, or have you exhausted your time in the workforce? Regardless of the answers to these and other questions, our new guide called Preparing for an Upcoming Retirement can provide some insight that may help you make the right decision. Call 800-393-4001 to request your free copy of the guide and get a head start on building your retirement plan. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Beneficiary planning and asset protection go hand in hand, and Cushing & Dolan, the experts in elder law and taxation, can help make your planning process smooth and easy. Simply saying you're leaving everything to your kids isn't as simple as it sounds, especially if they have problems of their own. If you're retired or nearing retirement, it's time to consider the best way to keep your assets in your family while avoiding significant financial consequences down the road. Call Cushing & Dolan right now at 866-848-5699 and get their new guide called How to Leave Assets to Your Beneficiaries. You'll learn which paths are the safest when it comes to protecting yourself and your children while avoiding unnecessary risks that can cost you dearly in the long run. That number again is 866-848-5699, or you can request it online from our website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
Beneficiary planning and asset protection go hand in hand, but leaving everything to your kids can be problematic. Call Cushing & Dolan at 866-848-5699 and get their new guide called How to Leave Assets to Your Beneficiaries. Don't leave your future or your children's future to chance. Call 866-848-5699 or request it online from our website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Breaking business and financial news first throughout the day. Only here on the Financial Exchange Radio Network.
The Biden administration, really this year and last, has made a key focus to cut down on what they call junk fees, and they are honing in on the airlines with some new rules that are going to go into place within the next 6 months to 2 years on all sorts of things, but primarily what they're describing as junk fees. So, Paul, what exactly are they talking about with some of these?
So the biggest impact for flyers out there, Mike, would be that if your flight was canceled or significantly changed, you get your full money back, which to me on a whole is just a great provision to have, because oftentimes, and it varies by airline, you get a flight credit or you might get some sort of optionality, but just getting that cash back is a nice, clean, easy way to do it. That was one of them. You also have, when baggage return is delayed significantly, that would be another case of refunding the cost of the baggage. And then lastly, if they don't get the in-flight amenities, so if you have Wi-Fi on your particular flight and for your flight you can't access it, which seems like it happens more often than not, you will get refunded for the portion of the ticket that you paid for that service, or if you paid for that additional service and didn't get it.
Yeah, I've been going back and forth on this because to some degree, I flew, it must have been 12 years ago. I was flying Frontier Airlines, and I flew from Chicago to Arizona on Christmas Eve, and our flight was delayed 22 hours. Now, I did not have kids at this point. It was a massive pain, but rather than just canceling this flight, they delayed it by an hour at a time for 22 hours in the airport.
Oh, my God.
And at the end of that, they were nice enough to offer us credits to fly on Frontier Airlines again. And at the time, I don't know if they do today, but in Boston, they didn't fly in and out of Boston. So I said, this is particularly useless to me. And I fought them on it, and there was no going anywhere. Like, they don't care. And so, I ended up having an expired credit to fly on Frontier Airlines again, which I never used because, again, they didn't fly anywhere in New England, really. And under this provision, they wouldn't be able to do that. They would have to say, look, we delayed your flight by an hour for 22 hours, and here's your money back. Likewise, I think it's particularly ridiculous that if you pay for a checked bag fee or a carry-on bag fee and it somehow gets lost for 24 hours, that you're still responsible for that fee. Again, seems a little bit ridiculous. The part that I struggle with is these aren't monopolies, right? Like these companies are competitive with each other. And I think most people recognize that when they choose to fly on one of the discount airlines like Frontier, like Spirit, they're going to be dealing with policies that seem kind of ridiculous, and that's why the flight costs so little. So I'm not sure where I land on these rules. I mean, I do think it's a good thing that, hey, if I pay for something and then you don't fulfill the promise, you have to pay me back in cash. That seems very reasonable to me, and I like that as a consumer. From one of the companies, I don't know. If I disclose it to you prominently that, hey, this ticket's non-refundable, and even if we cancel the flight, you're getting a flight credit instead of cash, I don't necessarily have a problem with that. I would have a problem if you didn't properly disclose it to me when I bought the ticket. Like, hey, we can cancel this flight, and too bad, you don't get your money back.
Right.
So I don't know. That's a little bit tough for me. The other piece that they're going to require, which to me I feel like this already happens, is airlines must list and explain all extra fees clearly, conspicuously, and accurately on their web platform. I've never really felt it's unclear to me that I'm going to be paying for a checked bag when I fly on an airline.
How about the seating piece? That one, I'm not saying that they don't disclose it, but they kind of slip it in at the end.
Yeah,
now
I guess.
How more of the airlines will charge you even just to pick any seat, whether it's the middle or aisle or et cetera.
Yeah, I mean, again,
It's not
I feel
like it's not transparent. It's just...
It's annoying, but again, if I'm the consumer and I'm saying, hey, I want the cheapest flight available, then you're not getting to select your seat. You're getting put in the middle between two giants, and you're not getting a carry-on or a checked bag. And for some people, they might want that. And again, that option isn't going away here. I don't know. I felt like some of that stuff was already properly disclosed.
The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way, so whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean Paradise is waiting for you, so head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Southwest Airlines struggling or continuing to struggle in the face of Boeing's failures. These are not any problems that Southwest themselves seems to be having, but they now expect fewer jet deliveries this year, no kidding, and they're looking to boost their financial performance, so they're planning to limit their hiring, reevaluate cabins, and likely eliminate some of their airports or at least cut some of the terminals or gates that they use at these airports. And I don't really know what other choice you have if you are Southwest. If you're in this position, which they have put themselves in, which, if you're not familiar, Southwest only flies Boeing airplanes. They do not have any Airbus fleet, and they've done that to be efficient, right? The entire idea was, hey, if we just get one supplier of all of our aircraft, then our pilots, we don't need to buy multiple simulators for our pilots to train on. They can cross-train on most of these flight systems because they're all going to be the same. The cabins are going to be exact replicas of each other, so the flight crew will be familiar with it, and they can clear the aircraft faster. That was Southwest's claim to fame, right? Is we're going to turn this plane faster than any other company out there. They really revolutionized that back in, I think it was the 80s when they started out of Dallas. It was, hey, we've got to turn this cabin in 20 minutes because we're going to get new people on this plane, and that was revolutionary at the time. The downside to that is if that dedicated supplier that you have to get all of your planes falls flat on his face like it has over the last 5 years with Boeing, then you're left in this difficult position where, you can't just suddenly go, even if they wanted to, right? Like if they called up Airbus right now and said, hey, we need some...
You guys got any planes?
Yeah, sure. Get to the back of the list. We'll get you some planes in 4.5 years, and the simulators will be there in 6. That's how the airline industry works. That's how you build all of this. And so, unless Southwest is willing to make a break from Boeing and dedicate themselves to going in both directions, then I think they're going to struggle for a while here, so long as Boeing continues to do so.
It's amazing the ripple effects that Boeing's shortcomings have on some of these companies in the airlines.
That's so nice. Shortcomings. That's a good word to use.
I beat them up pretty hard the other days. Yesterday when we were talking about the new CEO replacement, but it is just really difficult. If you're Southwest here, Mike, you're really boxed in. There's not any other alternative because anything else would be incredibly costly and take a really long time to course correct. So you just have to sort of batten down the hatches.
Markets remain strongly in negative territory with the NASDAQ leading the way down almost 2%, 293 points at the 11 o'clock hour. We've got a lot more to cover in the second hour of the show, so stay tuned, everybody.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Preparing for an Upcoming Retirement. Mike, what are some of the things that can derail a retirement that otherwise would be going fine?
I mean, there's all sorts of items. Certainly, a pension going bust or Social Security getting reduced, people worry about. Certainly, we all worry about market volatility and the risks there or inflation. But one of the ones that I think people almost intentionally avoid is the risk of increased healthcare costs. I think we're familiar with Medicare costs and things along those lines. But the portion of Americans who will face some sort of heavy end-of-life care and the costs associated with it, it's a big chunk of Americans, and gosh, it's such a taboo issue that we hate talking about and being transparent about. And so you really have to tackle that one and be straightforward with the potential risk.
It seems to me that just doing some stress testing with some actual numbers can make a big difference in determining whether or not that can cause a problem for you.
Yeah, most certainly. But the costs of things like nursing homes or assisted living facilities are so frightening to people and almost unfathomable in terms of total cost that we just choose to stick our head in the sand sometimes. And that's not necessarily the wrong approach to things like market volatility. But when it comes to planning out your future financial success, putting your head in the sand is a losing strategy.
Our guide this month is titled Preparing for an Upcoming Retirement, and there are two different ways that you can request it. The first is by calling 800-393-4001. The second is by visiting ArmstrongAdvisory.com. That phone number again is 800-393-4001, or you can visit ArmstrongAdvisory.com. DAVIDRobert.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
Do you use the expensive blue or yellow pills to charge your sex life? Are you thinking about it? What if we can promise you the same results for less than $3 a pill? If you're paying $20 a pill for the other pills, you're getting taken to the cleaners. Our pills deliver the exact same results for less than $3. You'll save more than $16 a pill for the same results. And right now, radio callers will get 44 blue or yellow pills for $120 with free discreet shipping. You can save more than $700 off pharmacy prices. Charge your sex life now and save a ton of money. Call now and get your 44 pills and save over $700 and qualify for free shipping. Stop overpaying and call right now.
Paid for by Steel Man Pills. 800-475-8547. 800-475-8547. 800-475-8547. That's 800-475-8547.
If you served in the Marine Corps, by now you know about the contaminated water problem at Camp Lejeune. If you were stationed or worked at Camp Lejeune from 1953 to 1987, you probably have a lot of questions. We have some answers. You could be entitled to compensation. Billions of dollars are being allocated to pay for damages to anyone stationed at Camp Lejeune during that time. Unfortunately, it appears that officials may have known the contaminated water problem existed and did little to protect their men. The Semper Fi code was not honored. If you or someone in your family has developed a serious illness, including various forms of cancer, call this Camp Lejeune legal support line right now. You can't turn back the clock and change what happened, but you can certainly call right now and learn your rights as a Marine. Here's the number.
800-477-1736. 800-477-1736. That's 800-477-1736. Paid for by Legal Alert Line.
Leaving assets to your beneficiaries is a critical piece of any estate plan. Cushing & Dolan has written a new guide that may help you avoid unnecessary mistakes that can cost you dearly in the long run and ensure that your assets are protected for generations to come. An example? The federal estate tax exemption has increased by nearly $1 million from 2023. That could lead to a larger inheritance for your family members. There are several strategies in this new guide that will help you learn how to make the right decisions about your distributions at the right time. Cushing & Dolan have been helping New England families for more than 30 years. Let them help you too. Call 866-848-5699 and get their brand new guide called How to Leave Assets to Your Beneficiaries. That number again is 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com getStarted.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to ArmstrongAdvisory.com and let us help you secure your financial future. That's ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Welcome back to the Financial Exchange. If you're just joining us now, the markets are in the midst of a fairly significant sell-off here. We've got the Dow at the moment off 653 points, 1.7%. The S&P off 67 points, 1.3%. And the NASDAQ off about 263 points, closing in on 1.7% as we open up the 11 o'clock hour here. Russell 2000 off 29 points, nearly 1.5%. And the yield on the 10-year Treasury spiking a bit up to 4.706%. It was a little bit higher earlier today. Price of a barrel of oil down to $82.14, down 0.8%. And a ounce of gold will go for $2,348 as of this morning. Anything else catching your eyes in markets, Paul?
No, the bond spike to me, we talked about in the first hour show, that was definitely a surprising outcome from this GDP report. But
to recap on the GDP side, we saw a first reading of GDP growth for the first quarter of 2024, following two really strong quarters. The fourth quarter of 2023, you saw GDP growing at 3.4%. We came down to less than half of that in the first quarter of 2024, 1.6% read on GDP in the first quarter of 2024. We also heard from Meta chief executive Mark Zuckerberg, sorry, I almost said Elon Musk for some reason, Mark Zuckerberg yesterday on that company's earnings, which earnings themselves quite solid, continued growth as Meta has done over the last 12 months, but investors quite concerned about their plans for those profits, which are to pour back into both the metaverse and artificial intelligence, and some investors saying, where's the payoff going to be? After the bell today, we'll hear from Alphabet, parent company of Google, as well as Microsoft, and the same focus is going to be on those two companies. Are you investing heavily in artificial intelligence soon? When can we expect to see a profit from it? Or are you pivoting? Are you just seeing sales growth elsewhere? So all eyes will be on those two companies because they do represent $5 trillion worth of combined market capitalization and about 11% of the overall S&P 500. Piece from Bloomberg today from Connor Sen. Housing will get more expensive because of the Fed. Help me understand that one, Paul, because that's certainly not the goal of the Federal Reserve when they bump interest rates, is to make things more expensive.
No, what Connor's pointing out is the classic, economic concept of supply versus demand. And what the story has been in the United States on the supply side is it's been underdeveloped across this country for the last 15 plus years, since the 2008 housing crisis. As a country as a whole, now different areas vary more than others. We have just underproduced in terms of housing capacity on the supply side. And what Connor points out in this piece is this idea that by increasing borrowing costs and increasing the Fed fund rate so that builders out there who are very tied to borrowing money on whether it be a variable line of credit or a fixed line of credit have to pay a higher interest rate for the capital that they're borrowing to build homes, it's going to deter them from building it. The Fed's job is to keep inflation under control. But inflation is many components, right? Yep. It's not just the cost of shelter. That's a big component of CPI, about a third of it. But there's another 2/3 out there, eggs, on and on and on, these other lists of items that they have to focus on. They can't be the solution for everything. That is just not what they're built to do. They have a limited tool set to work with, and
it's
that's all they can do.
I would agree there. It's not the Federal Reserve's job to build housing. Let's clarify. It's not their job to combat climate change. It's not their job to cook Paul dinner tonight. Their job is to maintain a reasonable level of employment and maintain reasonable prices. Everything else is just being added on here. The housing piece that's interesting to me is you have to go way back in the history books for this one, but in the 1970s, the way that they measured housing inflation included a rent calculation, but it also included mortgage payments. And so at that point in time, what they were seeing is, oh boy, our policy of raising interest rates to cut down on inflation is actually leading to more inflation in the way that we measure it because of the fact that it included mortgage payments on a lot of variable rate mortgages. So you know what they did?
No.
They just changed how we calculate inflation.
The renter-owner.
Honestly, that's what they did in the 70s. They introduced this thing called owner's equivalent rent, right, where they're saying, hey, we don't really care what your mortgage payment is. That's not the relevant piece of inflation. We care about what you could rent your home out for if it were on the market right now. That's how we're going to measure whether inflation is being combated here or not. So we say, hey, yeah, higher interest rates should lead to lower costs. Well, practically speaking, in a number of different ways, no, they lead to higher costs. We just don't count those towards inflation, right? You want a car today? That car payment's going to be a lot more expensive. You have a bunch of debt outstanding on your credit card? Those costs went up substantially over the last few years, neither of which contribute to inflation, by the way. Neither of those things contribute to CPI. We look at, in terms of car prices, we look at car sales price. We don't look at monthly payments based on the interest rate on the debt. We do not look at the new mortgage rates that you're getting. We look at other things like insurance costs on that home or car. We look at the car price, the sale price on the home, the rent that you pay. But we don't actually look at the cost of debt and how that contributes. And so this, once again, I don't suggest that we do anything about that. I think that the Fed's method of driving rates higher to eventually control demand is the proper way to handle things. But when we ask questions of people like, how are you feeling about this economy? What does it feel like inflation is? And they give economists answers that don't make sense to them, that inflation seems to be getting worse. This is a big part of it.
Definitely.
If you had an outstanding credit card bill, inflation did get worse for you because that rate on that credit card increased a lot. And, regardless of where egg prices might have gone in the last 6 months, if you have $1,000 outstanding on a credit card and that bill just keeps going up and up, or a home equity line of credit or any other revolving type of debt, then the inflation story is pretty real for you still at this stage.
Yeah, or if you bought a home and you're borrowing at 7 or 8% versus, 3 or 4.
Yeah, we've talked about, with the combination of increased housing prices plus mortgage rates, the average mortgage payment, I think, what do we say, 40% higher on the same home?
40 or 50, yeah.
Yeah. So, you can see how people would be responding pretty negatively to inflation, even though yeah, the way that we measure CPI or PCE, which is coming out tomorrow, inflation, it's showing, market improvement compared to 2022. White-collar job growth seems to be stalling, even in a lot of those pandemic boom towns that we've been talking about. It shouldn't be any surprise to anybody listening here that, pandemic boom towns like Austin, Texas, are not seeing quite the same job growth that they did previously. But I did find this statistic interesting. So hiring in professional services, finance, and technology, those three categories, those hirings are running at about 1/3 the rate of the overall labor market. So not 1/3 of the rate of all the other jobs, but 1/3 of the rate of the entire labor market, which speaks to how much faster hiring is happening in areas like healthcare, construction, government work, things along those lines. If you have a position in, advertising sales for YouTube, or you're an engineer in some of these spaces, or you're in the finance industry, spreading sheets for a living, it's not exactly as robust as these labor reports are showing right now. And so some parts of the country, like San Francisco, where they rely on a huge portion of that type of labor to grow their city and grow their tax base, struggling quite a bit.
That's a direct impact of those growth companies out there, whether it be in the startup space. There's just been a lot less activity there, whether it's mergers and acquisitions, IPOs. A lot of that is tethered to the lending market. It's more expensive to raise capital, and as such, you're cutting headcount or not hiring as many people to expand those types of companies. So the same thing would apply for consulting and banks out there, and that's why you're seeing, Mike, those sectors of the market be a little bit weaker. The other areas, though, have picked up the slack. We've still seen a strong labor market, but it's been these other areas that have been weaker for some time now.
Let's take a quick break. When we come back, going to have a little bit of trivia for you here next on the Financial Exchange.
The latest news on inflation, the Fed, the economy, and how the markets are reacting every morning, right here on the Financial Exchange Radio Network. Beneficiary planning and asset protection go hand in hand, and Cushing & Dolan, the experts in elder law and taxation, can help make your planning process smooth and easy. Simply saying you're leaving everything to your kids isn't as simple as it sounds, especially if they have problems of their own. If you're retired or nearing retirement, it's time to consider the best way to keep your assets in your family while avoiding significant financial consequences down the road. Call Cushing & Dolan right now at 866-848-5699 and get their new guide called How to Leave Assets to Your Beneficiaries. You'll learn which paths are the safest when it comes to protecting yourself and your children while avoiding unnecessary risks that can cost you dearly in the long run. That number again is 866-848-5699, or you can request it online from our website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange Quick Tip of the Day. And today we're talking about your brand new guide, Todd, How to Leave Assets to Your Beneficiaries. Todd, why can't you just add your kids to your accounts or to your house deed?
Well, you can. It's just not a good idea. So people who do that understand with an account, right, you can put a joint name on the account. Now, that doesn't actually complete the gift because you actually have to take the money out and then the gift is complete. But when you set it up, yeah, the asset would avoid probate. But if something happens to the child, it's going to be, available. Half the asset would be subject to the children's creditor. So you don't want that. And secondly, if you only put one kid on the deed, you've likely disinherited the other kids. So it's not really good planning overall. Whereas if you put the house in the kid's name, now you've actually made a completed gift of half the house and would need to file a gift tax return, number one. Number two, of course, it's exposed to the child's creditors and, yes, divorces. You could find yourself at some point owning half your house with an ex-in-law. Not sure that's a good way to plan. So please, put together trusts. Don't just throw names on deeds or on bank accounts because, as I always like to say, nothing good comes from giving assets away while you're living.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they've written a brand new guide called How to Leave Assets to Your Beneficiaries. To get your free copy of this comprehensive guide that will help you determine the best way to leave assets to your family, simply call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange is now available on your Alexa smart speaker. Ask to play the Financial Exchange and catch up on anything you might have missed. This is the Financial Exchange Radio Network.
Trivia is brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m., including half-price boneless buffalo wings, half-price spinach and artichoke dip, and half-price warm pretzels dipped in beer cheese. Gather with friends any day of the week at Applebee's and say hello to half-price appetizers served late night because half off is just more fun. Now, that's eating good in the neighborhood, void where prohibited. Dine in only. Well, 2 years ago today, Twitter announced that a sale had been agreed upon with Elon Musk. Musk's tenure as owner of the social media platform has been divisive, with some institutions claiming the value of the company has been halved since his purchase. Trivia question today: how much money did Elon Musk pay for Twitter? Once again, how much money did Elon Musk pay for Twitter? Be the 10th person today to text us at 617-362-1385 with the correct answer. You can win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text, and we'll give away that Applebee's gift card on tomorrow's show. 617-362-1385, and the 10th correct response will be our winner. See complete contest rules at financialexchangeshow.com.
Yesterday, President Biden had signed, was it yesterday, the TikTok ban? I think it was yesterday or the day before. Signed into law.
Tuesday evening. Whatever,
Tuesday
recently.
Evening. Very recently this week, President Biden signed into law, among other things, a ban on the TikTok platform that will go into place within 270 days unless the platform is sold by its parent company, ByteDance. Takes about 9 months is what we're talking about here. And very likely the U.S. government will face lawsuits over this from TikTok as well as some of their users on I don't really know what, because I'm not much of a espionage type act expert. I mean, for context here, we do this type of thing in terms of disallowing foreign entities to own all sorts of stuff. I know this is being posed as a very new thing, but if, for instance, you want to own the radio station that this program is airing across, you cannot be a foreign citizen. Or at least you couldn't back in the 80s, I think. Same goes for network televisions, telecom companies in general. So, again, there's no law in the books that would necessarily allow that to go forward today. But this concept of a certain piece of technology being required to be operated and owned by an American entity is not a completely new concept. Sure. And I want to start there as a premise because I know that that's the case with radio stations. I believe it's the case with cell phone services as well as cable network television programs as well. So I think that's an important distinction here. Nonetheless, this is very likely to end up in court, and I think one of the top questions that Bloomberg asks and others are asking is, where is China likely to retaliate based on this? Because over the last year or so, China's been pretty hesitant to retaliate all that directly on new sanctions and other items. I think mainly out of concern that they would do more harm to their own economy than good.
Yeah, they're in a tough spot as it is. We've covered their property market and just how dismal that is, and just the Chinese economy in general is really in a transition phase, to put it nicely. Otherwise, you could just say it's really lousy right now. And the numbers...
Dumpster fire is the term that I've used before.
Dumpster fire is fair. Micron was one company that kind of got caught in the crosshairs on some of the restrictions on chips that were slapped down, and as a result, China launched a probe into Micron, and they were really impacted by that probe on their business front. Similarly, you've got on the social media network front where Meta and Snap are no longer available to Chinese citizens.
I was going to say that. Like, what are you going to do? Ban Meta? We're not there. Snapchat, same story. WhatsApp, not in the country. So LinkedIn, not there. So the direct retaliation, China's already effectively banned. I think some of them just pulled out because in the case of LinkedIn, for example, the Chinese Communist Party was insisting that Microsoft take down negative posts about the Communist Party even outside of China, and they just said, forget this, we're just leaving China. So, where are you going to retaliate, I think, is a fair question. And, some of the semiconductor companies, if I'm Apple, I think it's unlikely, but I have to be concerned here, too.
I was just going to go there, Mike. I'd be shaking in my boots if I was Apple. We've covered on the show recently the slowdown in demand for their iPhone products in China. I have theorized that that's largely because of the pushing of the Chinese government to buy domestic and buy Huawei phones and other options and steer clear from iPhones.
Think about it this way, right? So Apple products, I believe, are forbidden from government devices in China. So let's say you are not a government worker in China, but your dictator government is telling its own employees you may not own an Apple product. Out of either fear, patriotism, or just concern for other things, if I'm in that position, even if it's just fear of my own government, I'm going to be hesitant to go buy a new Apple iPhone compared to a decade ago when the Communist Party was embracing Apple with open arms. And I think that's perfectly logical, whether it's whatever the push is, regardless of how direct the Communist Party is in telling people to not buy iPhones, I think the insinuation is there.
Yep.
And I can see why that's happening.
And they would be the target to hit. We joked about Meta and Snap not being options, but Apple would be the one to come after if you were trying to do somewhat of a tit-for-tat deal.
Again, comes down to, though, are you going to harm yourself more than
because the manufacturing
others?
side of things.
If Apple starts seeing their sales decline in China that dramatically, they've already started to pick up manufacturing in India, in Vietnam, in other places. And if you ban them from being sold in your country, why am I here manufacturing? If I have no access to the market, I know that you manufacture this stuff better than anybody else, cheaper than anybody else, and it's going to be tough to replicate anywhere else in the world. But if I really can't sell my product in your country, I'm not going to have as much of a presence there. So it is this interesting tit for tat where they want to be able to strike back, I'm sure, but how they do it without further sinking their economy into a tough situation is kind of an entertaining question, quite honestly. The piece that we mentioned earlier, they've got 270 days to potentially divest of TikTok, and now the guessing game begins and the bidding game begins in terms of what this company could be worth. I don't think anybody really knows because I'm not even sure we have real clear information into revenue and sales and profitability for this Chinese-owned company.
Allegedly, people familiar with the matter said that their revenue from advertising and live streaming last year was about $22 billion. That would imply a valuation of $110 billion, depending on what multiple you want to use. But to be clear, it's unclear what the valuation and what the revenue really looks like. To be clear, it's unclear when you're dealing with China.
Yeah, got it.
And that's just how China goes in general. But it is certainly something that is going to be of interest. What U.S. company could possibly take over and would be willing to pay whatever premium they decide in order to take over the U.S. operations of TikTok. The one piece that I'll add on the deadline is that the president, I believe, does have the ability to extend it to 12 months. 9 months is the initial one, but then he can grant an extension for an additional 3. But bottom line, in the next year or so, something needs to be resolved, or for all the TikTok users out there, then they will be out of luck.
I'm going to have to return that light stand that I bought for all my fancy dance videos that I post on TikTok. I'm not sure what the resale value is on that thing. And also, to be clear, on whatever valuation is out there, the Chinese government has made very clear that they don't want this sold and that they're not going to allow it in the first place. So we can...
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
Beneficiary planning and asset protection go hand in hand, but leaving everything to your kids can be problematic. Call Cushing & Dolan at 866-848-5699 and get their new guide called How to Leave Assets to Your Beneficiaries. Don't leave your future or your children's future to chance. Call 866-848-5699 or request it online from our website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Preparing for an Upcoming Retirement. Mike, what kinds of things do people need to look at to know whether or not they can undertake a successful retirement?
Yeah, I mean, first steps first, we talk about your income sources in retirement versus your expenses. And usually the easiest thing today is to look at what are my income sources now, how will they change, and what are my expenses now, and how are they likely to change. On the expense side, oftentimes it's not that big of a change, but I think that's the first starting point before getting into more complicated things such as my investment portfolio, my health insurance situation, or Social Security strategies.
Mike, a lot of times people are concerned about whether they have enough to live all the way through retirement, and so they might delay their retirement significantly. But it's also worth pointing out that sometimes the biggest risk is not retiring early enough, and you might miss out on some retirement years that way.
Yeah, I mean, look, we all do get worried about longevity, and there are plenty of warnings out there in the media about how Social Security or these other things might not keep pace. But man, it sure is devastating to see the opposite one, where you work your whole career, work your tail off, save all this money, and it can impact your health. It can impact all sorts of things. And to not get to enjoy that full retirement because you choose to work longer than you might have needed to is so much more frustrating.
Our guide this month is titled Preparing for an Upcoming Retirement, and there are two ways you can request it. The first is by calling 800-393-4001. The second is by going to ArmstrongAdvisory.com. That phone number again is 800-393-4001, or you can visit ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
Trivia question today was, how much money did Elon Musk pay for Twitter? That would be $44 billion. A couple of months after the announcement, Musk tried to back out of the deal, citing a lack of spam bot control by the company. Before heading to court in October, Musk reversed course and moved forward with the acquisition. It's now named X, by the way, in case you didn't get that one yet. Kevin from Yarmouth, Mass. is the winner of the Financial Exchange Show t-shirt, and Kevin's also registered to win a $100 gift card to Applebee's, which we'll give away tomorrow. And trivia is brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m. because half off is just more fun. Now, that's eating good in the neighborhood, void where prohibited, dine in only.
I just have to say, that might have been like some of the most entertaining business news that I've ever seen.
There's a lot to cover.
Right, like Elon Musk just running his mouth into a multi-billion-dollar acquisition of a crappy social media platform.
It's good for the show, yeah.
Oh,
I liked it.
So good. Yeah, I loved that. Two pieces on retirement that we have, one from the Wall Street Journal, another from, is this the Globe maybe, quoting from the AARP. In both cases, some changing patterns in terms of people's work and retirement habits. According to the Wall Street Journal, some 28% of workers said that they expect to retire at age 65. Age 65 is also the median answer to the question for workers. So the most common middle answer is age 65 is when they intend to retire, in spite of the fact that the full retirement age for Social Security these days is pushing up to 67 years old. And I guess I would agree. Like when I talk to people, I think 65 is the most common answer that I get to.
I would agree, and it's important to note that that's the age that you can enroll in Medicare, and so that seems like a very common one. Is people want to know that their health care is going to be not covered, but you'll have an option that precludes you from going on the exchange.
$1,000 a month for private health insurance. However, while that goal for years now has been 65, the median actual age of retirement has been 62, which I find fascinating that, also lines up with the earliest you can claim Social Security benefits. So that part's interesting. While at the same time, 1 in 4 U.S. adults over the age of 50 say they expect to never retire. And to me, this is all a story about expectations versus reality. And I think is a really, really important one to drive home. Paul, I know you have, I have as well, met with people who have every intention of working till 65, 68, 70, whatever that number is for you, or according to AARP, forever, planning to work throughout their retirement. The fact of the matter is, sometimes health or lifestyle or other things don't allow for that, especially as you're getting into your 60s. You've got potentially family stuff, grandkids that you want to help care for. You might have health problems. Your spouse may have health problems. And quite honestly, whether I like it or not, our labor market has a pretty evident bias towards younger workers.
bias in favor of younger
Correct.
workers. Sure, of course.
And so when you look at layoffs, when you look at voluntary buyouts, who do they always target? It's the older workers. And so that ability, even if you have every intention, that ability to work towards age 65 is a big one that I end up talking to clients about is, yeah, I know that's your goal. I hope you get there. But we need to plan for that not being a distinct possibility, right? Like, what happens if you get laid off in your early 60s and you need to find another job and it ends up being 40% less than what you were working for before, which unfortunately, again, ageism is a real thing out there. That's been a reality for a lot of people over the decades.
Yeah, you also have, depending on the sector, so technology tends to skew younger, right? So there's a impetus to kind of force out those older employees, Mike, like you were mentioning. And then there's other areas of work that are physical in nature that where you may want to go to 60 plus, but the nature of the job just dictates that your body breaks down beforehand.
If you're a line worker for Eversource, it's going to be tough to maybe climb up that pole at age 70 compared to when you're 40. If you are facing down retirement in the next decade and you're trying to figure out all the answers to these questions, how long do I need to work? How long will I realistically be able to work? And what happens if I can't get to that eventual goal? Will I still be all right? These are the types of questions that financial advisors assist with. If you're facing down these types of questions and trying to figure out how that 401k or pension or Social Security are all going to work together to build your retirement strategy, call the Armstrong Advisory Group. Phone number is 800-393-4001. This is at the core of everything Armstrong Advisory Group does with our clients. Again, to speak with an advisor at AAG, Armstrong Advisory Group, the phone number is 800-393-4001, or you can also request an appointment online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
I was going to talk about Saudi Arabia, but it just seemed a little bit too heavy. We'll have to punt that one to tomorrow. I'm instead going to talk about U.S. fertility rates, which is also not exactly a good news story. The total fertility rate in the United States fell to 1.62 births per woman in 2023. It's a 2% decline from a year earlier, and drum roll, the lowest rate recorded since the government began tracking the data in the 1930s. Tucker, Paul, myself, congratulations all on bucking the trend here. All of you are above that 1.62 average, so way to go. Keep on chugging. I'm, for one, put my hand up.
I will
as
not
done.
keep on chugging. No. No thanks.
Just drink from that fire hose there, Tucker. But here is why. Let's bring this back to why this actually matters. Again, I think you can make a compelling argument to me that this doesn't necessarily matter for productivity. It doesn't necessarily matter for quality of life. We've seen other countries with far worse fertility rates and population growth rates that, while their stock market might not be great, the quality of life in Japan, I don't think anybody looks at and says, oh God, what a terrible place to live. The problem that this potentially and very likely creates or makes worse is that many of our social programs are built on the idea that the population continues to grow.
Right.
The two biggest ones that I'm thinking of happen to be Social Security and Medicare, but there are plenty others as well. And if you have fewer and fewer people eventually aging into Social Security and Medicare, then it's tough to make the problem that we already have any worse than it already is. So I don't think the low birth rates yesterday are going to make the 8 years on Social Security that we have left turn into 6. But long term, any of the fixes that are going to be proposed, right? If you're fixed to Social Security is, we're just going to raise taxes a little bit and pull back the retirement age, that becomes more difficult the slower the population growth is. So this is a real phenomenon we've been experiencing for years. The fact that we marked an all-time low is not exactly a great sign. The question also is, again, to me, there's a few ways to fix the social programs issue. Either you completely dramatically reframe how all these programs work in terms of taxation, benefits, etc., or you find a way to grow the population. And Birth rates are falling, so immigration is the logical alternative there if you're not going to, like I said, dramatically reform our social programs.
Yeah, there's a stat that always blows me away pertaining to Social Security, Mike, where in 1940, there were 42 workers per retiree being paid out benefits. That ratio today sits at 3 workers paying for every 1 retiree's benefits. So there's just far less workers in the system paying.
What was that, 1940?
1940, 42 workers
to 1.
Per retiree paying taxes to fund their benefits. Now that ratio sits at 3 to 1, and per the demographics piece that you were mentioning by 2050 projected to be 2 to 1, done by a study here at UVM that I was reading here.
That don't work too good.
No, it doesn't.
That's going to be a real problem.
Real flip of the pyramid, and that's not what you want. And Social Security, Medicare, and the budgeting issues that this country has, it's not something that's going to come up as a red flag today or tomorrow, but it looms as a significant risk that needs to be resolved over the next decade. Really sooner. It should be acted upon sooner. It won't be. But
yeah, the longer you wait, the worse the outcomes have to be.
Yeah.
Right? If you decide to move tax rates 8 years from now, then you have to move them higher than if you move them right now. That seems logical to me, but I have to repeat that because our lawmakers don't
count on that social,
Mike.
Don't
seem to get it. Quick break. When we come back, Stack Roulette on the Financial Exchange.
Breaking business news as it happens, only here on the Financial Exchange Radio Network. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all 3 and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Beneficiary planning and asset protection go hand in hand, and Cushing & Dolan, the experts in elder law and taxation, can help make your planning process smooth and easy. Simply saying you're leaving everything to your kids isn't as simple as it sounds, especially if they have problems of their own. If you're retired or nearing retirement, it's time to consider the best way to keep your assets in your family while avoiding significant financial consequences down the road. Call Cushing & Dolan right now at 866-848-5699 and get their new guide called How to Leave Assets to Your Beneficiaries. You'll learn which paths are the safest when it comes to protecting yourself and your children while avoiding unnecessary risks that can cost you dearly in the long run. That number again is 866-848-5699, or you can request it online from our website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
If you're one of the millions of Americans at or nearing retirement age and you don't have a solid plan, it may be difficult for you to enjoy your retirement years. Hi, this is Chuck Zada from the Armstrong Advisory Group, and I've got some questions for you that may offer some guidance as to whether now is the right time for you to retire. Can you retire? Do you have enough money to live the way you'd like to? Should you retire, or have you exhausted your time in the workforce? Regardless of the answers to these and other questions, our new guide called Preparing for an Upcoming Retirement can provide some insight that may help you make the right decision. Call 800-393-4001 to request your free copy of the guide and get a head start on building your retirement plan. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
Beneficiary planning and asset protection go hand in hand, but leaving everything to your kids can be problematic. Call Cushing & Dolan at 866-848-5699 and get their new guide called How to Leave Assets to Your Beneficiaries. Don't leave your future or your children's future to chance. Call 866-848-5699 or request it online from our website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
The Financial Exchange has built an incredible partnership with the Disabled American Veterans Department of Massachusetts, and we can't wait to take part in this year's DAV 5K set for Saturday, November 9th at Fort Independence on Castle Island. Registration's now open. You can help our great American heroes by walking, running, or simply making a donation. Your gifts will support services such as the Veteran Advancement Program, which offers permanent and affordable housing opportunities for veterans and their dependents. Learn more at DAV5K.Boston. The DAV 5K Boston is presented by Veterans Development Corporation.
Well, I've got devastating news for all of our Mainer listeners at the moment. As I mentioned earlier in the show, Red Lobster is seeking a buyer as they look to avoid filing for bankruptcy. I know how big a fan of Red Lobster all the coastal Maine residents are. When it's just a real tough time getting a good fresh lobster roll up there, you turn to Red Lobster. I'm, of course, kidding. The closest one to Maine is in, I don't know what's closer, Hartford or Albany?
Beats
Tough
me.
to say. But that's where the closest ones are in New England. Unsurprisingly, not a huge presence in New England whenever
There are some better alternatives.
wherever you turn around, you have a significantly better alternative than Red Lobster. Red Lobster was previously owned by Olive Garden parent Darden Restaurants. They divested of the chain back in 2014, and whether it is that divestiture followed by the revolving door of CEOs that's been in there since 2020. Maybe it's their unlimited shrimp deal, or I don't know if they changed the recipe on their Cheddar Bay biscuits or what. This is a company that has, well, they've got 700 locations with long-term leases in a restaurant segment that I think is struggling to stand out right now. Whether it's Red Lobster or any of their non-lobster competitors in the, what do we call this? Like the casual dining?
Fast casual.
I don't know if it's fast casual.
No, it's not.
Fast casual would be like a Chipotle, right? Or a Panera?
Yeah, that's fast casual. This is
just
just
like casual dining.
Yeah.
Yeah, that's where I'm
Step up.
tossing this one.
Okay.
And honestly, I think they have, not Red Lobster particularly. I haven't been to a Red Lobster, so I'm not. Oh, no, I did go. I insisted my wife and I go on the way to Chicago once. So, yes, I have been to a Red Lobster.
How
I take
was it?
that back. Not great.
I've never
in
been.
my personal
Me neither.
opinion. But when I look at the prices of some of these Five Guys or Chipotle, right, and compare that to what it cost me to sit down at a restaurant like this, we're talking about comparable prices here for, in some cases, what is a different type of service. But you're sitting down, you've got a waiter, you've got beverage options and a full menu. Like, you're looking at now a price differential between these types of products that are very, very similar. And that should be the selling point, and I think has been the selling point for some of these chains like TGI Fridays, Applebee's, and others who are pushing the fact that, hey, you can basically get this, get a meal for a similar price to these fast casual places and actually sit down with your family and enjoy it.
They have 700 locations, and so what's the plan? They're just shutting down entirely, exploring
I think
bankruptcy, or trying to...
They're looking for a buyer,
Okay.
but even if they find one, I think Chapter 11 is in their future.
Got
But
it.
in all likelihood, with 700 locations, I don't think they're going the way of the ground round here, where we're never going to see one again. My guess would be bankruptcy
step
followed
in.
by someone coming in, buy it out, renegotiate all the leases, renegotiate all the debt that I'm sure private equity has loaded them up with over the years, and emerge as a new, slimmer Red Lobster would be my guess. Less butter in their future.
Yeah, I can't speak to the lobster rolls, but not a problem that we have in the Northeast here. I'm going to switch gears a little bit and cover the story that pertains to titles in the workplace. We saw the FTC come out with a ruling yesterday where they were going to ban and not acknowledge non-competes. And as a result of that, there was a kind of a loophole built into it where for existing senior executives, they would honor those non-competes over a certain period of time. There's 6 months for this to go into effect. So there's a story here in the Wall Street Journal that points out you might see numerous amounts of senior promotions across the workspace as employers try to get employees grandfathered in under senior titling in order to enforce non-compete agreements. So you could be seeing the senior hairstylist out there to make sure he or she is locked in to a non-compete.
I liked the Wall Street Journal one. They searched for entry-level openings on Indeed's job board with senior as the keyword and got more than 8,000 results for senior entry-level positions. You can go from a senior in college to a senior associate.
I've had this conversation with my mom before or other people as well, where they'll say, well, so-and-so is a senior vice president. I was like, do you realize half those titles are BS? Some of them have merit to them depending at the company that you are at, but they're handed out very lightly in others, and nothing encapsulates this better than Dwight Schrute's role as assistant to the regional manager or assistant regional manager. That is the type of corporate shenanigans that goes on quite often. I understand for some businesses out there, they are legitimately earned, but for others out there, it is really just to brush someone's ego in the right direction.
Yeah, the piece on the non-competes is, well, in my view, probably likely to lose in court. It would be my guess. I don't know how if you missed out on this, by the way, that the Biden administration has basically said non-competes eventually are gone.
Mm-hmm.
Like, even for those senior executives where they're grandfathering in,
right.
I think they said that was temporary and certainly no new ones allowed in.
Correct.
And
How do you come down on this, Mike? Because I was talking about this with Mark on the show yesterday, where I kind of saw both sides to this argument.
I would logically like to see a bill passed where if you make under, I don't know what the threshold is, but if you're making under like $50,000 a year, the idea that you can be subject to a non-compete to me is ridiculous and should be completely banned.
Yeah, I saw somebody post yesterday on Twitter that they had a job that they made $47,000 and they had to sign a non-compete.
Right. Like that's to me
that's crazy.
Absolutely ridiculous. However, I also think that the executive branch has no business regulating it.
That's true.
Right. Like Congress needs to pass a bill here, and I think they should. But yeah, I mean, asking your entry-level sandwich maker to sign a non-compete, which is a real thing, by the way.
Really?
What?
Yeah.
That's
stupid. There was a big sandwich chain across the country that was using non-competes. Non-compete. I don't know if they still are. Jimmy John's. Yeah, Jimmy John's was using non-competes for years with sandwich makers.
Don't know our secrets.
No, they just don't want them to quit.
That's the guy from Everybody Loves Raymond who does those ads, right?
Yes.
But
Brad Garrett.
Yeah, to further that point though on the non-competes, how often do you see them enforced when the hairstylist leaves? Like, yeah, it's there, but why was a lawyer going to go after the person making $47,000? Like, it's almost not even worth your effort. I understand there shouldn't be one in the first place, but how often do you even pursue that? What money do they have?
Markets remain strongly in negative territory with the Nasdaq leading the way down off over 255 points at the moment, 1.6%. We'll have a full market recap tomorrow as well as updates on Google and Microsoft earnings. Have a great day, everybody.